Good morning, everyone. Welcome once again to our weekly broadcast. Opened a few minutes early, so we will have our customary, John's favorite part of the webinar, the minute and a half before the minute and a half start. So good morning, John. How are you?
This is my favorite part. What do you think?
It's always the part to fill in. Good morning, Ajay. How are you?
Morning, David. I'm good. How are you?
Yeah, very well. Very well.
Isn't this the part where you want predictions or something? That's what I dislike.
Yeah.
So,
Was it last week one of our guests mentioned the crystal ball? I think it was, and I thought, yay, John loves crystal balls.
were they selling or buying?
I can't remember who was the guest last week.
But we had a panel. Remember Women's Week?
Yes. Well, one of the women, can't remember which one it was, definitely mentioned a crystal ball at some point. You know, something like we don't have crystal balls.
Maybe they wanted to sell you one.
Highly possible. So morning, everyone. We're going to kick off live just in a few seconds. So, AJ, this is one of the mornings where I don't actually have to ask you what the weather's like in London, because I'm actually in London.
Oh, wow. That's very good, David. I should tell you, from where I'm looking, it looks beautiful. It's nice and sunny. It's actually a nice day in London. I don't know where you are, but you could be deep into central London where things could be a bit different. But here, it's beautiful.
Yeah, I'm not too far from Oxford Circus, is where I'm staying. So there's definitely clear blue sky, but it's either the semblance of low crowd or else it's smog, one of the two, just a little bit over the skyline. But yeah, it looks a nice bright day. Sun is definitely shining, which is
David,
fantastic.
we in London, we never even notice the smog. It's just there. We stop.
Yeah, but when you're used to the Emerald Isle of green fields and clear blue skies, although normally it's rainy clouds most of the time. But anyway, okay, listen, let's get started. So welcome everyone once again to our weekly broadcast. We do these every morning, every Thursday morning at 10 a.m. And a lot of people tune in then to our YouTube channel and catch up on the weekly updates. So if you haven't already, please subscribe to our YouTube channel and you'll be able to get notifications of when a new broadcast is up there for viewing. So as indicated, I'm actually in London today. Wi-Fi connection does seem to be intermittent. So if my voice does break up, John can let me know and I can let John and AJ sort of carry on and I can drop messages into the chat box. For those attending today, please put any questions you have or comments into the Q&A section, not into the chat. And John and I can pick those up and make mention to them as we go along. So those who know me already, David Johnson, CEO of Leo Crowdfunding, equity property crowdfunding platform. And delighted again to be joined by my co-host, Mr. John Corey. Over to you for an introduction.
How's everybody today? Things are sort of, it's not sunny here yet because it's a little earlier, but looking forward to today's conversation.
Excellent. I'm delighted to be joined by Ajay Kapur from the PLMD Group. Morning, Ajay. How are you?
I'm very good, David. Thank you for having me. And yeah, nice, beautiful day to do a webinar like this.
It is indeed. It is indeed. So we'll obviously be over to you just in a few minutes, but we'll do our other bits and pieces first by way of updates. So, John, we'll go straight in actually to your Ask John question. So what's been selected today and is, what do you suggest doing if you sense things are starting to go wrong with an investment that you've already made? It might be excuses, poor communication, etc. So what do you do as sort of a professional passive investor?
So just thanks for clarifying, because I wasn't sure whether you wanted to know from the passive investor side or from the person running the project side. Essentially, you have to chase people, but at the same time, I like to passively invest through a platform, Leo being one, but that means there are other investors, so you could possibly ask the other investors. You can ask the platform. There may be third parties involved that you could check in with if the primary person has gone a bit quiet. I don't think you should badger them to the point where now you're becoming an annoyance. At the same time, it's fairly common, I've done this myself, that when people are deep in something and they're really busy, they tend to stop talking, and that's actually makes things worse in many cases. So you want to strike that fine balance between proactive chasing them down and the not just letting things tick over passively and ignoring the lack of information. You also need to find out why is the information late. Is it the person's not communicating, they've sent the message and it went into your spam? If you're using a platform, did the platform publish it or not? So it could be just a breakdown in the process rather than a breakdown in sending the information. People will get credit for being timely with their updates. So if people are poor at their communicating, definitely ding them, think about in the future, think about this deal. Now, flipping slightly, there's been some failures recently. And what you'll see is patterns that in every one of those failures, the communication started to drop off. The information didn't make sense. So what's the phrase? The squeaky wheel gets the grease or whatever. So don't be the quiet one that gets hit the hardest. Be the one who sort of moves to the front of the queue and asks hard questions early. You might actually get paid out or rewarded or somehow compensated quicker than the people who quietly just go along for the ride.
Mhm. Wearing my approved hat, sort of FCA approved person's hat. I mean, this is why there are risk warnings on investments of this nature. Capital is at risk, returns not guaranteed, because as a passive investor, you're actually limited as to how you can influence a project that's beginning to go wrong. The information is vital, but knowing something's going wrong or being aware something's going wrong doesn't necessarily mean you do anything about it. It just means you're aware it's going wrong.
Correct. Yeah, and at some level, that's why I passively invest. I'm willing to accept some degree of I can't control it, but that also means I'm not responsible for heavy lifting at the wrong time. You got to make that trade-off when you decide to invest. Don't make it later. Know up front that you're limiting your options as a passive investor.
Mm-hmm. And Ajay, I'll just bring you in here. Obviously, as a fundraiser, as someone who does developments, obviously, I'm sure over your many years of property, there have been a few projects that have obviously haven't went exactly to plan. So from the other side, then, as a developer, how do you think about engaging with investors that have invested in that deal to inform them things aren't just going to plan? How do you manage that?
I think, David, my take would be it's best to be upfront, transparent, and communicate. Because you're right, investors are passive, but you never know. Help could come from anywhere. Somebody could come up with a brilliant suggestion that you haven't thought about. Because in business, you can never have enough friends. And your investors are more than your friends because they've invested with you. Not all of my friends have invested with me, but the way I look at it is if you tell a problem, somebody might have a solution. Somebody might know something that we don't know. And that can only happen if you communicate transparently with investors, with everybody. And as they say, if there's a problem shared is problem halved. And we have a lot of investors to share problems with and say, look, this is what's happening with this investment. We're all in it together. What we should do. And somebody could say, hey, by the way, have you thought about this? And why don't you do this? And you can ignore all the suggestions, but at least they're there. You can pick one of them and maybe that would make a difference. Who knows? So I would say, and then investors are smart. They're partners. They're smart people. That's why they're investing money into projects. They can see through. You're being transparent. You genuinely are asking for help. You're genuinely doing the best you can. I mean, just imagine John invests in one of our projects, and John can see we're doing absolutely everything that we can do, and we're communicating, we're being transparent. That would give him confidence. He doesn't want to do heavy lifting, but he might have a suggestion to give. Similarly, other investors would have a suggestion to give. So I would say, yeah, communication is complicated. It's a 13-letter word for a reason. Yeah.
Yeah, that's a very good point. And I think just in summary, John, I suppose you could say passive investors are passive in one sense, but don't be passive about making sure you're getting information. Is that a fair summary?
Yeah, it definitely chase the information. And I think AJ's got a really good point. I hadn't quite thought of that. They're almost a brain trust. And many times if they're the slightly older, more seasoned investor who's looking to put their feet up a bit but has a bit of cash. They may have a lot of experience, so they have a network they can tap into to help out. So that's a very good point, AJ.
Okay, so that's just a couple of quick update slides to keep everyone in the loop as to what is happening on our platform, and then we'll move to our guest and our special topic today. So at last, probably should have had drum roll and fireworks going off. We've eventually got Aldwick Road is now view deal. Remember, there were a couple of delays. There was a change in senior debt provider, which then affected the numbers. So we delayed the launch to make sure the numbers were accurate and robust. So I know Tina and the team down at Target 5 been working really hard to get this ready. So it's now on the platform as view deal. Minimum raise 100,000, maximum 200,000. This is a mixed use HMO project down in Bognor Regis. You can see there projected 15% ROI over a 12-month period. And the plan is to actually turn the apartments above the commercial unit into emergency housing. This is very much sort of the hot topic over the last number of months. And this is what Target 5 plan to do with this to help sort of some of the crisis down in the Bognor Regis area. So emergency housing, social cause, if you like, aspect to this one. I know, John, you have done work with Target past, have been a client of yours in the past. This is very much their sort of bread and butter type projects.
Yeah, I mean, I don't know about the social housing aspect, but the idea of a mixed use building, some sort of commercial on the ground floor, and then residential HMO on the above makes a lot of sense. Now, you're saying in this one, David, it's a rent, so purchase, refurb, and rent. So the 12-month estimated time is the payback, or that's when it'll get rented?
Nice. Sorry, I should have been clear on that. The investors will exit after the refurb phase, but okay. The Target 5 are going to hold it as an asset.
Yep. Okay.
Yep.
Yep.
So I should have been clear on
that. They definitely do a fair amount of that when it comes to buying and developing for rent. And as emergency housing, yeah, it's a slight twist in what they've classically done. That'll be interesting to watch.
Yeah. I know a number of investors who invested in their West Buildings project are actually sitting with the returned funds that they received a few months ago. So this is, oh goodness, if Dal or Brenda's on, they can correct me in the chat. I think it goes live for investment next Tuesday at 12 o'clock. That's Tuesday the 29th. But we'll confirm that. In fact, there we go. Forgot what the next slide was. So we have project webinar is next Monday night with Tina and members of the team. So if you are interested in this project, you want to know more, next Monday, 7 p.m. There's your bit.ly link to register for the webinar. On the right-hand side, of course, you can leave your email address and an amount you may be interested in investing, just to register your interest in this project. And I say we go live on the 29th at 12 noon. Another project we've been talking about, Waite's House, is now being prepared for view deal. This is from Hitesh and his Creation Tech team. He's JV'd with a very experienced developer construction team. And this is a house or a large building they're going to convert into apartments down in Ferrum. So again, keep an eye out for this one, and it will be coming view deal in due course. Oops. And yeah, all the investors who invested in Avon Valley should have received an email yesterday with the SPV accounts for this project. So the funds are there ready to be dispersed in terms of buying back the shares of the investors. Sharon have approved, or FCA principal have approved the accounts, but they're off with the investors. So probably tomorrow, this will then, the shares will be purchased back by the company. And again, John, so that'll be our third project where investors have been bought back out again. So it's good to get momentum on that.
So just looking at what's on the screen, so there's 29 investors in this one, and it's Beaumont Homes. So I guess that's Ed and Miles Morgan. Mm-hmm. Yeah, they've done a few projects, various platforms, I mean, Miles has got a very long career in Ed's certainly been working in the business for a while, along with his siblings. So it's good to see these come to fruition and then close out on to the next one.
So let's jump straight on then to our special guest and topic for today. Ajay is the founder and CEO of PLMD Group, based up near Stratford. And today the topic we're doing is investment in uncertain times. And this is something, Ajay, you and I have chatted about at different conversations, or when I've been in your office with Dal and some of our visits. We're talking about the market, what affects the market. So I thought it'd be useful, given your background, not just in property development, but in sort of your previous life, working with some of the banks and big institutions. So do you want to start off, maybe first of all, just give a very quick overview of your working background and then what you've done in property?
Yep, absolutely. Thank you, David. Thanks for that. So, as you can see on the slides, I've worked for various banking institutions: Morgan Stanley, JP Morgan, UBS, Bank of America, and predominantly in asset management side, which is what means is, for these big institutions, they manage these assets, and one of the assets they manage is property, and then there are other assets like stocks, bonds. All of these uh, are basically assets that a institution like this would hold and manage. Now, this is very relevant because what happens is a big institution has got lots of money, like Morgan Stanley, and they would always have a well diversified portfolio of investments. So a lot of them would go into equity, stocks, bonds, property, gold, oil, other reserves. But if you look at the investors, the individual investors, they have to be very, very careful about their investments. And I would always say we should always diversify whatever we're doing. I don't personally always do that myself because I believe a lot in property. And I think that that's one investment that has proven to be very good over a very long period of time. And uncertain times, which is what the topic is for today, I would say one thing: yes, it has been uncertain right now, but I cannot recall where you could go back and say, everything is good, these are certain times. That never happens.
Mm-hmm. Mm-hmm. And that's a very fair point. Very, very point. So what we're going to do is we're going to actually come off the slide so that we're actually on full screen. It's better for people watching than us being in the corner. But the three kind of questions we're going to cover in the next 15 minutes is, in your opinion, how do you define safer investments? We're then going to look at what events or factors have you seen affect investment decisions, and that's kind of, you alluded to that in your previous comment. And then what options are there in property in times of uncertainty? So I'm going to come off screen. That first one is, in your opinion, how do you define safer investments? And then, of course, John can bounce in anytime he wants and contribute.
Sure. Okay, so safer investments. Let me just describe what we do. We buy land, we convert them into flats, and then we rent them out. So we're always looking for those lucrative deals in and around London. We try and avoid zone 1 and 2, but after zone 2, we try and find these opportunities where we can develop the land, convert them into living units, and then rent them out. This, I think, is safer investment. I mean, I'm not saying zone 1 and 2 is not safe, but there's a lot of value in there, which can quickly get eroded in uncertain times. So
yeah.
let's look at safer investments from a. Sorry, David, go ahead. You were saying.
Yeah, I was going to say, but thinking even not just property, a bit wider than that initially, and maybe John, if you want to comment on that, just in terms of a market that maybe we're in now, and people are thinking about investments in general, of which property is one segment. Do people tend to maybe go towards a certain asset class, or do they just not spend money?
Well,
do you want to comment, John, first?
Warren Buffett talks about diversification is for people that don't know what they're doing, because he believes that if you concentrate in a particular sector or style or whatever, that you gain competitive advantage, that you use your knowledge plus the market. And you can, one way to be conservative with the property deal is don't use any debt, all cash, no debt, and you won't get squeezed out of it at the wrong time. So there are ways to dial down or dial up the risk, even within the one thing you do. rather than spread your money across so many things that you don't really understand and then wonder what happened. So.
And you mentioned, AJ, your background obviously with some of the banks. It wasn't just property. What other asset classes, in your experience, do people tend to look for in times of uncertainty?
Yeah, absolutely, and that's a good point, David. Because what happens is what's happening right now: Russia, Ukraine, oil crisis, supply shortages. We are human beings. We are emotional. We will go to the stock market and get our money out. Oh, I don't feel good about it. Oh, then there is a news. They might be blowing up the nuclear reactors. You can't do that with property. Property has got stickiness. You have to wait and watch, and that is the stability that you need. The stock market, other investments, they have very low volatility. Wow, one bad news, boom. Another good news, bomb. Something happens all the time. It will always go up and down. Yeah? But
Mm-hmm.
with property, people have to be a bit more stable. They have to, I would say, they have to behave a bit more mature. Because you just can't like, oh, I can't just sell my portfolio. I have to be like, okay, let's weather the storm. Let's see what happens really. What is it leading up to? And that volatility that's in the stock market, that's in other investments, doesn't exist in the property market. And that, in my view, is very good.
Yeah,
And
that's an interesting take on that. It isn't liquid. You can't just jump in on an emotional,
yeah,
news based reaction and go and liquidate all your property assets, or
yeah.
very hard to do.
And then it's tempting, David, if all of your friends are selling on the stock market, honestly, you would start thinking of selling. When the property market, nobody sells. We all look, yeah, let's see what happens. Let's see what happens. And you know what? That creates another thought process. We will weather the storm because we can't sell just like that anyway. So
Yeah,
we're going to weather the
yeah.
storm and see what happens. And you know what? It never is as bad as it seems. The other thing that I would say is, and that's personally for me, a safer investment is something that you can touch, see, and feel.
Mm-hmm. Mm-hmm.
Yeah.
Yeah, there's a lot of logic to that, which is
I've,
why people
I've
do
got
like
stock
property.
market. I've got stock market investment. It's there. It's a piece of paper. It's some numbers somewhere. This is real.
Mm-hmm.
It's real
Mm-hmm.
in the sense. So when we did this Dagenham raise on Leo crowdfunding, Dal actually came and saw the investment. He wanted to see it. He wanted to take some pictures there. So he was there. He touched it, saw it, felt it, took pictures, videos.
Mm-hmm.
He was like there. It was not just some goofy piece of paper or some software that has been written and that would change the whole world and then actually somebody else. I mean, look at software, for example. The software is an investment, I would say. But what happens typically? Somebody comes up with a better software and then there's only one winner. Like there's only one Facebook, there's only one WhatsApp. Yes, there are small versions here and there, but the winner takes it all. In
Mm-hmm.
real estate, there's no winner who takes it all. There is space for everybody.
Yeah, that's a good point. Very, very good point. So, in terms of your journey, and again, John's had a longer journey than both of us, and I'm sure he's got some additional things to comment on. But what factors have you saw in your journey that have had an impact on the market and had people deciding what to do in terms of investments?
Sorry, David, say that again, please.
What is there been any significant things or events that have happened in your property journey that are these type of moments that we're in now where there just seems to be a lot of uncertainty? Any that spring to mind?
Yeah, absolutely. I mean, look, we just came out of the pandemic. That's a big test to pass for any investment. For
Mm-hmm.
any investment, I would say, look at the stock market. People were buying and selling, and options were going here and there. Crude oil prices were going here and there. We stood to our guns. People said needed a house. We were lucky. And I would say in that respect, it proved that this would be resilient. And before this also, a lot of stock market crashes have happened. There's a lot of negative news. We're going through a war right now. But if you look at the property news, it still looks good to me. I was just reading there's 11.6% raise in rentals in and around London in the last 3-4 months. And we are in a war. There's major supplies issues which are affecting UK. That's
I
that's
think
what
that's an interesting point that you have to also be good at identifying what risks are happening. And it may be hard because things are changing quickly, but as an example, Susie from last week's session was saying she's pricing out some timber for her project. One of her friends is a timber merchant, and he said 40% of the timber for the UK that is used in the building trade comes from Russia. Second of all, the boats were loaded, so to speak, in the supply chain. Well, all that is now no longer able to be purchased, shipped, delivered. So then they have to unload, they have to go pick up from somewhere else. You're having this dislocation, same with oil. So there may be a good, strong demand for housing, and yet there may be a material shortage. So you have to work your way through those details and then smooth it out. But as AJ is pointing out, particularly the UK, we still have a demand for housing. People are essentially going to work, going home, living somewhere. Maybe they're not working the offices as much, but there's certainly business, trade, housing, supply needs. So the core thing that underwrites underwrites real estate in general, but housing in particular, is demographics. How many people? Do they have jobs? Where do they live? Where do they want to live? What can they afford? Inflation is a big variable that might have more of an impact in the short term when it comes to what they can afford. So.
Mm-hmm. And another factor I find frustrating, but it's also relevant, is how much of the fluctuation in price or the increase in prices in commodities and materials is opportunistic as opposed to being essential. So, and I don't know what the answer to that is, but the reality is there's no doubt that I think people do take advantage of pandemics and of wars, add some price to their costs, use that as the excuse, and are making more money off it. I think that's a reality. I think it happens with fuel prices and oil prices all the time.
Well, there's the cynicism, that sort of optimistic price rise. Then there's also, we have this many tankers full of oil, which no longer can go where they were going. And the person that was buying it needs to backfill. So they have to go buy it from somewhere else. So now you have a bunch of buyers all swing to a limited target. So you have this sort of dynamic going on, that whether it's I'm raising my prices because I know I can, or I'm raising my prices because 15 of you just called and 10 of you are not my customers. And like, what do you want? Who's going to buy it? I got one load of oil. So.
Yeah. Although I suppose my cynical side seems to be every time there's a sort of a world event that puts pressure on oil prices and the price at the pump goes up by X%, whenever that crisis is over and that impact is stopped, it never seems to come back down to where it was. It always seems to stay high. It goes up by 10p and drops by 5, goes up by 20p, drops by 10. I mean,
if that was true, we'd be at 50 pounds a gallon at this point. But I think partly there's spot price versus forward price, that there's long-term contracts, people locking in a price or stable delivery. And then until that contract expires, my costs aren't going down, even though the spot's going down. So, but we could try to second guess that. I think that's one of the problems people get in. They overthink it. And what AJ's saying with property is that you can't get out of it easily. So you're going to stay in it for a longer term. And therefore, it'll sort of be a more stable asset long term, which makes it slightly more boring for the traders.
Yeah. Brilliant. Okay. And then 30, then AJ, to wrap up here in the next 2 minutes or so. What options are there in property in times of uncertainty? You've already alluded to that a little bit. And I'll sort of prompt you by, as you already mentioned, you did a raise there recently. But this discussion we've had, this type of investment, perhaps lends itself to times of uncertainty. But I'll let you explain why you think that.
Yeah, absolutely, and thanks for putting that slide, David. This is a good example. So things could go here, there, anywhere, but people would always need a house to live in. People might not want to invest in their own home because of uncertain times. Yeah, I mean, you don't want to make a major investment decision when there's so much happening in the world around you, but you still need a place to live. That means you would be renting, which is a good source of income if you're in the build to rent segment. And any income product, I would say, any income product based on rental income is a good place to be. And that's what this project was. And hence it was very well received. And I would say we would come up with more income products in the future, I would say in the next month or so, because I can sense that myself. Like we want to invest our money, our funds in investments which we know in these uncertain times would deliver the returns we expect.
Mhm. Yeah, yeah, and of course, even though this is might be classed as a safer investment, putting sort of italics around that, there is of course still risk involved with this investment. But compared to development risk, compared to material shortages, material price hikes, labor pressures, none of those are going to impact this type of a project.
Yeah, that's a very good point, David. And John just mentioned earlier the timber prices have gone up by 4 times. I mean, how can you deliver a project? No project has planned for this kind of a rise in basic material.
Mhm.
Hence, it would affect the profitability of those projects. But once the project is completely done, rentals are good. And I must admit, people are happy to pay a bit more rent to stay in the same property they were living in last year.
Mhm.
And
Yeah.
that, as long as you're giving them a good service, and that means this kind of return actually grows much significantly than other investments in these uncertain times.
Mhm. Excellent. That's a really good, a really good sentence to finish off with. This type of good investment in uncertain times. So, AJ, thank you very much for joining us today and for sharing your words of wisdom and your pearls of knowledge that you've accrued over your business working life and your time in property. And look forward. We're probably going to be planning a project, well, what we call an investor project update webinar, probably in a couple of weeks' time when we get round to the first payment on this project. So it'll be good to get the shareholders on and actually show them obviously what's happened in terms of the rental income. And again, I think we'll build confidence in this type of an income project. So thanks very much for coming on. And I'll be seeing you tonight at the Canary Connections is the networking event. Give a shout out to Barry Ray on his networking event tonight. Oh, it is sold out, so unfortunately nobody can come to it. But I think you and your staff are booked, AJ, to go there as well, aren't you?
Yes, we will be there, David.
Yeah, and Dal, our investor portfolio manager, and myself will be there also. We're the sponsors tonight of the event, so looking forward to connecting to people there. So next week, John, we've got a brilliant topic next week. I'm actually really looking forward to this one. So it's health and safety. Not that I normally get excited by sort of this more mundane part of property investment, but I've had a couple of conversations with Adam over the past couple of weeks. And just in general conversation, he was mentioning that someone, I think he said around the Manchester area, but he's going to have the press article. Someone was actually given a 16-month jail sentence for inadequate health and safety on a development site. And I thought that makes a good topic, I think, for a broadcast about property. So next week, Adam's going to join us and talk about not just bigger development, but even for buy-to-let refurbs. What are the health and safety factors that people need to be aware of and make sure they have covered? So I think, John, this is going to be an interesting one.
Very good. I remember Adam, now that you mentioned it, he was on our prior session. The guy really has got a lot of experience and has been around a lot of projects in the UK, so up and down the country. So this could be very interesting because I think he'll weave together the wider topic and how it impacts projects.
Yeah. Just going through any of the chat from earlier. So yeah, someone made the comment here that was talked about earlier that AJ was making, that passive investors can be part of the solution. So that was from a developer who was on today's session, and they just said, speaking to the passive investors, don't go quiet on us, which was a good way of putting it. So encouraging the investors to engage with and communicate with the developers. And I think they're all the main ones that they talked about. So that is us for today. So thank you for joining us. This will be on our YouTube channel within about half an hour. If you want to reach out to me, you can get my details there. And fill in that. We will see you again next week. So thanks again, AJ, and thanks, John.
Thanks, David.
See you all.
Talk to you all next week. Bye-bye now.